All righty, folks, it's that time for us to look at what happened to CPI, what happened to PPI. Most importantly, talk about how we ended the week and how we are set up for the Fed meeting next week. We're going to, of course, do this with your fan favorite, Mr. Dan Bird. Dan, how you doing?
I'm doing great. How are you?
I'm doing very, very well. Well, I think we should first look at what inflation prints were last week. And then I want to make an announcement. I usually have a great feel for what the Fed is going to do. And heading into this meeting, I don't, but I actually have an idea I want to run by you. But first, let's look at inflation. What'd you see?
All right, so let me show you the CPI number. Let me share my screen. Hang on. And there's something really interesting that I noticed in this too.
Okay.
Can you see my screen?
Yeah, I can now. Thank you very much.
Okay, so this is my website, breakpointtrading.net. If anyone's interested, my newsletter's right here. I did talk about what I'm going to tell you a little bit in the newsletter, but it's something very interesting that weaves into the CPI conversation.
Okay.
So let's first bring up CPI and take a look at what happened. And CPI came in, interestingly, it was as forecast, but the forecast actually went down.
Yeah, it did. It went from 2.6 to 2.5. Yep.
Right. So this is the September one. Let me turn on here's the one that was just reported right there.
Yep.
Big gap in the 12-month window. And whenever that happens, usually CPI comes in better.
Yep.
So I was saying 2.7, 2.6. I did not expect 2.5. So it's much lower than expected.
Mm-hmm.
But based on this gap right here and based on what commodities were doing, kind of makes sense.
Yeah, I mean, oil and fuel oil were down double digits month on month when you actually looked inside the numbers. And
right.
Yeah, pretty crazy.
And we had a little deflation on the 1 month rate of change right here.
Mm-hmm. Yeah, I think that was 3 months ago.
Yeah. Yeah, 2 months ago.
2 months ago, okay.
And that's what I want to point out here in a second. It's actually highlighted up here, but tell me what you think is going to happen.
So when I look at what the Fed has in front of them, I believe the Fed is going to signal what they really are feeling about the U.S. economy. What do I mean by that? I believe the Fed is either concerned or afraid. I really think that's what's going to come across in the Fed meeting. If the Fed is concerned, they will cut a quarter. If the Fed is afraid, they're going to cut a half. And I honestly, for the first time in years, don't have a feel, and thus I'm not even making a call. But what I am telling you is you're going to know the behind the scenes feeling of the Fed Wednesday afternoon. If they cut a half, they are afraid. And if they cut a quarter, they're concerned. That's where I sit Sunday morning.
Okay. I mean, that kind of parallels what I said last week, which was if they cut a quarter, everything's fine. If they cut a half, the market won't like it. And will probably sell off.
Yeah, that's the whole be careful what you wish for, right? I think there's a lot of people out there now trying to push the Fed into a half. And I'm like, do you really know what that means, folks? If they go a half, it means they're afraid. And you don't want the Fed afraid.
Yes. And I think the market will sell off if they go a half.
Okay.
But I don't think they're going to go a half.
Okay. Tell me why.
I think they're going to go a quarter because I think right now everything is working perfectly, exactly as was expecting it to. Unless they're seeing something else under the covers that I'm not seeing right now, I think the Fed is going to be.
I would agree with you. I think that is exactly what's going on, right? If the Fed truly believes this soft landing that they've been trying to engineer is still likely, they cut a quarter. They're just concerned, right? They're like, hey, we need to get back to a little less restrictive. We need to tinker at the edges. We're doing a good job.
Yes,
but
that's right.
If they cut a half, they see something. They see something in the data. They see something bad.
That's right. So we can go back I don't know, 3 or 4 months ago when I was saying that September was when the first cut was coming.
And
And
you're right. You were right.
the other thing that I said was by the time we get that number, the unemployment rate will be ticking up.
Mhm.
The CPI number will be ticking down dramatically. I
Mhm.
said we will be below 2.5 by the time we get to the Fed meeting. We're not
Okay.
below, but we're at it.
Yeah,
We're at 2.5.
correct.
And I said, and my exact words were, the Fed will declare victory in September.
Mhm.
So when you say concerned about what? Concerned about the economy, unemployment. They
Well,
won't be concerned about
yeah.
inflation anymore, I don't think.
No, no, inflation. Yeah, it's not on the radar anymore. I think they will, to your words, and again, right, nailed it. You got it right. They're going to declare victory, and if they haven't already on inflation, it's
Right.
going to be concerned. If they go a quarter, the concern will be the job market, right? The
Yeah.
job market has gone from, I don't know, 3.8 to 4.3, 4.2. I forget. I think it went down a little bit last time, but that's where it's at. I think the job market, and I've said this, is in a much, much worse shape than the headline numbers show. I think we've seen a drastic loss in full-time employment made up by part-time employment. I think the underlying job market is not as strong as it looks, and that's why I'm afraid the Fed cuts a half, because they lost 818,000 jobs, just poof, gone, never existed. We've seen 3 months in a row where part-time jobs outpace full-time jobs. I think the last 2 months full-time jobs were negative while part-time was positive. That's not a healthy economy. So my
Yeah.
fear is the Fed sees that and they go, damn it, we need to go a half.
Yeah. I don't think they're going to see that yet.
Okay.
I think they might see some indications of that happening. But you can look here. There's the unemployment claims. Unemployment claims ticked up a little bit last week.
Yep.
But
2,000 went from
for the
228
last
to
6 weeks,
220.
it's been going down.
Yeah.
And the
Agreed.
unemployment rate went down last
It
time,
did. It did.
right? And
Yep.
anything below 4.5, even at 4.5, is pretty normal.
Full
So,
employment's 5%. So of course,
right.
yes.
That's right. So I mean, none of this is really a huge concern right now. So I don't think the Fed is going to be afraid.
Again, I just have, and again, that's why I'm not making a call. This is the first time I haven't made a call in years. I just don't know if the Fed's concerned or afraid. And they might surprise us. There might be something they're seeing that, we're not seeing in the surface level numbers.
Yeah. So let me go back to this one again, and maybe the Fed. This is what they might be seeing, which is something that I noticed as I was putting my newsletter together this
Mm-hmm.
weekend. And of course, because CPI came out, I was obviously going to put this chart in.
Sure.
So this is the one that we just reported on. Here's the one that's coming up.
That's another beefy one. Another base
It's
effect is going to be
That's
quite
right.
large.
That's one. It's not quite as big as this one, but it's almost as big.
Yeah.
So we're at 2.5 now. What does that mean? 2.2?
Certainly 2.3, right? Certainly.
2.3
You
for
would think.
sure. Yeah,
Yeah, you
maybe
would think.
2.2.
Maybe.
Um, and then I was looking at it. I'm like, okay, then it kind of levels off. We got some small ones here. That's probably gonna, these 2 months will
Flat.
probably come in flat,
Yeah.
right? Maybe tick up slightly,
Mm-hmm.
possibly. Um, but then we get another kind of a big one here, but not
Mm-hmm.
huge. So again, it might be flat. So we might be hanging out around 2.2, 2.3 through
Yeah.
this period.
Sure. Yeah.
Maybe on this one, maybe go down to 2.1.
Okay.
So that's 1.2. That's 3 months in a row. 2.1 to 2.3.
Are you telling
And
me by June we're going to be under 2%? Is that the big lead up to this?
yeah, so these are the February, March, April, May reports. 1, 2, 3,
So
4.
2025. Got it. So okay, got it.
2025, right?
Got it. Okay.
So this is for the month of December, but it's going to be reported in January.
Got it. Yep, understood.
So this one. Here's how we can look at it. Here's the September report. Here's October, November, December, January,
Yep.
February, March, April, May.
So
February,
by May, what are you thinking there, big boy?
I am thinking this
Deflation?
deflation.
So
I'm not saying we will be below zero.
okay.
I'm saying we will be significantly below two.
So you're talking disinflation.
Disinflation heading towards deflation. And that's what the Fed might be looking at.
Okay. So, well, that's a pretty long time horizon. That's 9 months or eight
Right.
months.
Yes.
So let's play with that a little bit. So I don't want to put words in your mouth, but I'm just playing with the numbers now. So you're certainly think by May 2025, CPI headline will be under 2%. That's
Yes.
based on this chart.
Yes.
Do you think it's below 1.5?
Yes.
Below one?
Not maybe not below one.
Okay. So below 1.5. Okay. All
But
right, folks. So let me know right now in the comments.
But the rate of change right here, look, you can see that it's kind of slowly been going down.
No question.
But the rate of change, especially the 1 month, I think the 1 month could be deflationary.
Okay. Yeah, I don't think it's a wild call. I think your call below 2% is mathematically pretty good unless something wild happens. One and a
Right.
half might be a stretch, but I wouldn't mind making that call.
Right.
I think it's wise to stay away from the sub one. That gets a little hard to believe. But
Well,
yeah,
I think what the Fed might be watching, and they're not going to have that kind of data. The next report is going to be right where they want it.
yes.
Right, 2.2, 2.3, somewhere around there.
Yeah.
Then it's going to flatten out for a couple of months.
Yep.
And that they'll be happy with that.
Mm-hmm.
Right. And this will take us right up until through the end of the year, which is the sweet spot for the market.
Yep.
So the market's going to love this the 18th.
Mm-hmm.
They cut by a quarter. If they cut by a half, they won't love it. But if they cut by a quarter, which I think they will, the market will love it.
Yep. Yep.
Then we might even make it through, which I've been saying for a couple of weeks now. We might even make it through the worst period of the year, September and early October, without too much of a sell-off.
Mm.
And then the market takes off through this period when inflation looks very tame and the jobs number doesn't look all that bad.
Okay.
Till the end of the year. Then we get to February and inflation starts dropping like a rock. It's not so much what the number is.
Right. It's the direction.
Change.
Yeah. Yeah. Rate of change. Yeah.
2, and then it goes to 1.7 and then 1.5 and maybe even below 1.5. If it does that fast enough, the Fed is going to be concerned.
So let's play that out because let's say 1.5 is the number. We're just talking among friends. It's 1.5 in May. The Fed has 9 months calendar. It's probably got 5 or 6 Fed meetings. The Fed's going to start seeing this and they're going to take action early. Right. So, let's say they do a quarter, which is what you're calling. They'll be at 5 to 5.25 here, come Wednesday afternoon. How much cutting do you think they do by May?
I think they will do 2 more quarter point cuts later.
By May or by the end of the year?
By the end of the year. 1 in November, 1 in December.
So they're down 75 by the end of the year. Okay, right. That's reasonable. I've called 100, but that it's close enough. But what do you think by May? Right, if they see deflation, they see economy really slowing down. How much cutting do you think they have?
Four and a half by the end of the year.
Right. So that's so again, I think we have a little lag here. So let me ask one more time. How much cutting by May?
7. Then they will probably hold for a couple of months. Mm-hmm. Probably in March, they'll start cutting again.
Okay.
So by May, probably we'll have 1.5 at least.
Oh, that's funny because usually we're on the opposite sides of this. I think if they see this deflation and they see inflation going to 1.5, I bet they cut 300 basis points by May.
They could, they could, and that's going to spook the market big time. And
Yes, it will.
I've been saying for a while that September is when we're probably going to start a cyclical bear.
Hmm.
Lines up that.
Got it. Cyclical. Yeah, you have called that for a while. Cyclical bear starting in September. What are you going to be looking for in the Fed announcement, if anything, as we wrap up episode 1?
Um, there were some other things I wanted to show, but we have an unstable connection, so I'm not sure we'll be able to get to it.
Yeah. What are your closing thoughts for this episode?
I think we're probably going to get a quarter point. Market will take off. It might. There are some things that the market needs to get through in order to continue higher,
Mm-hmm.
which I'll show you on the S&P. So even though we had a nice rally and we've got a higher low, we got to get through this level right here.
Okay. 56.50.
That's right, 56.50. That's on the S&P. Okay. But if we look at and growth did well last week. So we've got a flag pattern here, which means we've got lower highs, also have higher lows.
Hmm.
All right. Break out one way or the other, but you don't know which way. It looks like it wants to break to the upside. And if we get a quarter point, I think it will. And then we'll see if it can get back up to the highs up here.
Got it. And is it fair to say, kind of tying this together, if they go a half, it breaks potentially
Goldilocks
to the
number?
Downside?
Yeah, the downside is back down here.
Okay.
I don't think we're going to get a huge downside if it does go down. I think by the end of the year, we're going to get a nice rally into the end of the year. And then 25.
Got it. Very, very cool. Well, the good news is here, we will be talking every Sunday. What is the website if somebody want to get your newsletter? Because you put so much work into that each and every week.
Here, breakpointtrading.net. The newsletter is right in this little box. Just click on that box and there it is. Friday the 13th cartoons in this week.
That's funny. Very, very cool.
By the way, article saying that the Fed's going to cut as after the Fed has raised for so long or kept it steady for so long, we usually get a recession.
Mm-hmm.
Say was we get a recession after the first cut.
Yeah.
For a year.
Yeah, you have.
So it's funny. I want to tell
very, very cool, Dan. Well, I appreciate you being here each week. Sorry the connection got a little wonky here at the end. We don't know why that is, but we tried to do our best. Dan, you're amazing.
All right. Next week, Fed meeting.
There you go.